All right, buckle up, because this is absolutely wild. Applied Digital just dropped a bombshell with a $7 billion deal with CoreWeave, and I'm still picking my jaw up off the floor. I mean, everyone was expecting one of the big hyperscalers like Microsoft, Amazon, or Google to swoop in first, but CoreWeave, they came out of left field and landed this monster. And get this company was trading at $3 a share not long ago, and now they're sitting pretty above $13 after this news broke. That's nuts. So before I'm going to tell you everything you have to know about this massive deal, keep in mind that this whole video is not financial advice. Everything I say is based on my opinion. So let me rewind for a sec to give you the full picture. I mean, it has been a few days, but it's still absolute insanity that this stock is not in the 20s currently. So Applied Digital inked a 15-year lease agreement with CoreWeave for 250 megawatts of data center capacity in North Dakota. We're talking $7 billion over the life of the contract. When I read that, I had to double check I wasn't seeing things. This is a company that was flying under the radar, and now they're pulling off a deal of this size? Unreal. Just think, guys. The annual revenue for Applied Digital was around $200 million right now. And now with that deal, they're about to receive around $467 million per year in average. This is more than double their current annual revenue just with one deal. When I first started digging into these AI infrastructure plays, everyone was buzzing about how we need more compute, more data centers, more everything to keep up with this AI boom. Some folks even bet we wouldn't see a big deal like this before October. But a deal this massive, this fast? Nobody saw it coming. This contract is literally 33 times their quarterly revenue. 33 times. Let's break down the numbers because they're straight up bonkers. Applied Digital's Q3 2025 revenue was $52.9 million. That's about $211 million annualized. Now, this $7 billion deal over 15 years works out to roughly $467 million a year from this one contract. That's more than double their current annual revenue, 2.2x to be exact. I had to grab my calculator to make sure I wasn't losing it. This kind of growth can transform a company overnight. Now, the cash doesn't all come at once, obviously. The revenue kicks in as the capacity comes online. The first 100 megawatt data center is set for Q4 2025, and the second 150 megawatts facility should be ready by mid-2026. My rough guess? They could see $180 to $200 million from this deal in 2026, ramping up to the full $467 million annual run rate once both centers are humming. That's massive when you consider their entire business right now barely cracks $200 million a year. Thinking about valuation, and look, I'm no financial advisor, just spitballing here. But if they're pulling in $467 million a year from this deal alone, plus their existing crypto mining business, plus any other contracts they snag, we could be looking at $600–700 million in annual revenue by 2027. Even at a conservative 5–6x revenue multiple for infrastructure companies, that's a $3 to $4 billion market cap. They're at about $2.9 billion now, so there might still be some upside, especially if they land those rumored hyperscaler deals. What makes this deal so juicy is the recurring revenue. This isn't a one-off project, it's a 15-year lease with built-in escalations. Once those data centers are up, Applied Digital turns into a cash flow machine. That's the kind of predictable income stream that infrastructure investors drool over, and it's why Macquarie is ready to pour $5 billion into their expansion. The stock went absolutely bananas, jumping over 50% on June 2nd when the news hit, and it's been on a tear since, hitting a new 52-week high. Crazy to think it was scraping $3.01 back in April during that rough patch. That's a 4x move! And this isn't some speculative biotech gamble, this is infrastructure, real assets, real contracts. As a tech geek, what gets me pumped is that these aren't just any data centers. They're building purpose-built AI infrastructure with liquid cooling and high-density setups. Sounds nerdy, I know, but it means they can pack 125 megawatts into 345,000 square feet, while most traditional providers need over 500,000 square feet for the same capacity. That's next-level efficiency. And here's the kicker. Nvidia's got skin in the game with both companies. They hold 7.7 million shares of Applied Digital and 24.2 million shares of CoreWeave, worth about $2 billion combined. A few weeks ago, people were freaking out, thinking Nvidia had dumped their APLD stake. Turns out, they didn't. When Jensen Huang's crew is betting big on your infrastructure play, You better take notice. The analysts are losing their minds over this, by the way. Every single one, 11 or 12 of them, has a buy rating. H.C. Wainwright bumped their price target from $7 to $12, Roth Capital went from $8.50 to $17.50, and Citizens JAMP raised theirs from $12 to $18. When's the last time you saw that kind of unanimous hype? The North Dakota location is a genius move too. Tons of renewable energy, cheap power rates, and the cold climate cuts down on cooling costs. Sometimes the obvious choice is the right one. But here's the one thing nagging at me, and maybe I'm overthinking it, but with all this hype, are we setting ourselves up for a letdown? The stock's up 80% plus since the announcement. That's a hell of a run in a short time. Then again, when you look at the revenue visibility, $7 billion over 15 years, that's some serious stability. Oh, and there's an option for another 150 megawatts, which could bring the site to 400 megawatts total. They're even talking about scaling the Ellendale campus to a full gigawatt down the line. A gigawatt! That's some serious scale. What gets me really excited, and maybe I'm drinking the Kool-Aid here, is that we're watching the infrastructure for the AI revolution being built in real time. This isn't just talk anymore. These are real contracts, real money, real facilities coming online. So as I said, the first 100 megawatt data center is slated for Q4 in this year 2025, with the second 150 megawatts by around mid-2026. That's an aggressive timeline, but it's doable, especially with Nvidia's engineers helping design these facilities. I keep circling back to this Nvidia connection because it's such a big deal. When the king of AI chips is putting up cash and lending their expertise, that's not just an investment. It's a strategic partnership that screams legitimacy. As I said, many people were actually thinking that the Nvidia guys have sold their stake in Applied Digital, but it wasn't the case in the end. Okay, one thing we haven't talked about yet, and it's a biggie. CoreWeave itself is a freaking powerhouse in AI. These guys aren't just some random tenant, they're a leader in GPU-driven AI workloads built from the ground up for machine learning and generative AI. That's a perfect fit for Applied Digital's high-density, liquid-cooled data centers. I know a lot of people were actually disappointed that it was CoreWeave and not Microsoft or Google. But this deal puts Applied Digital right in the heart of the AI ecosystem, not just as a landlord, but as a key player in the AI supply chain. With CoreWeave's growth exploding, they're backed by Nvidia, Blackstone, you name it. This partnership could open doors to more AI-focused clients. It's like Applied Digital's getting a VIP pass to the AI party, and that's a game changer we can't ignore. This is just the start of something bigger. Looking at the bigger picture, the AI data center market is set to explode from $15 billion in 2024 to $93.6 billion by 2032. That's a 26.8% compound annual growth rate for those keeping score. Applied Digital has $261 million in cash, giving them some wiggle room, and they're in talks with multiple US hyperscalers for up to 400 megawatts more capacity. With that kind of pipeline and backing, it's hard not to get stoked about the potential. Right now, with the stock trading above $13, but still below some of those 17 to 18 analyst targets, I can't help but wonder if we're still early in this story. That stock was already $12 worth before it fell down to $3, but this time it feels way different. We have some real revenue contract, there's no denying on that. It feels like real infrastructure for a real technological shift happening right now, not some speculative bubble. But hey, time will tell if I'm onto something here. So if you like the video and you're generally interested in update videos around the tech niche, then leave a like and subscribe to the channel, and then we'll see us in the next video again.